All right. Good morning, everybody. Happy Monday. This is the morning show here on Stock Market TV. You know us by now. Spencer, Steve, JC, Alfonso. What's going on today? We will talk about the bull market. We will talk about crypto. We may talk about earnings. We will talk about what JC will talk about on his mid-month conference call, which I believe is tonight. Check me on that. And as far as the guests go today, we have a great guest, Mike Hurley, one of our favorites. He'll be on the show at 9. We'll have Kenny Glick stop by. It's Monday. We'll have Ian Collie stop by. So a lot going on today on the morning show. Good morning, chat. Hope you all had a great weekend and got the most out of it. Let's go, shall we?
We out here. We out here. We're back, baby. We're back. We're still here. They haven't canceled us yet. Can you believe that? I would have taken the under that we would have gotten canceled by now.
No, never.
I got a big mouth. Don't want me getting with you.
Yeah, Spencer cringes when I say certain things. He gets starts turning red like a pink, kind of like a pink shade, you know, right, Spencer?
I'm looking at myself. I look a little pink now. I think it's the lighting in here. I'm not sure.
How was your upstate New York trip?
Wonderful. Yeah. Wonderful. Yeah.
Did you go for a hike or something?
No hiking, just some boating, some pool time, some softball, some pickleball. Good time.
Pickleball.
Yeah.
Watch that Achilles. I want to point out, we don't have to get into this whole political thing. I do want to make a point. After this weekend's events, no bid in gold.
Oh.
None. None.
Well, explain why you're even saying that.
Well, throughout my entire career, when you have the Associated Press hacked, the Associated Press Twitter account was hacked, and they said there was an explosion in the White House and Obama was in it. This was like 10 years ago, 11, 12 years ago. And money went straight into gold. Bitcoin wasn't that available at the time. Geopolitical uncertainty, assassination, like this sort of stuff, tends to get a bid in gold. That's how people start thinking more about. We didn't have that at all. That I thought was super interesting. Bitcoin up 6-7% since Saturday evening.
There wasn't a bid in Bitcoin because of this weekend's events.
There was.
No.
As soon as the assassination attempt happened, Bitcoin spiked. Oh, yeah. And it's been ripping ever since.
Bitcoin started going up when the future started going up last night.
No.
Before that, it was a snooze fest. I'm looking at it all weekend.
I love you, Strazza. You're wrong. I love you. You're not even close. It started ripping right away. Yeah. Because I was at a carnival and I heard from one of my friends what happened, and that was the first thing I looked at was what cryptocurrencies are doing. Yeah. To the minute. Phil's right. Strazza, you're way off.
When was the assassination attempt?
It was at 6:11, I think. I'm telling you.
I don't know the time.
I'm not bullshitting you. I don't know what you're looking at. Yeah, everybody knows I'm right. It's free public data.
So anyway, it's up like 4,000 points. It's not like some sort of scary bid. If anything, it's pricing a Trump victory and more.
Maybe
he also spiked in the polls.
That might be right. That might be right. The point is, you're probably right. The point is, as soon as it happened, since then we've seen nothing in gold. We saw Bitcoin absolutely explode. Small caps absolutely ripping last night, leading the way higher. And again, to your point, Strazza, that wasn't necessarily a last night phenomenon. That was last week and sort of more follow through this week. But still, right? You would think theoretically the possibility of a flight to gold, risk off maybe scenario, potentially as a possible outcome. Like if you told me ahead of time what was going to happen, I would have said, yeah, maybe look for gold, look for a risk-off environment, perhaps as one of the possible scenarios, right? You can't argue against that.
Yeah.
That scenario has not happened at all. Bitcoin spiked right away. Again, to your point, probably you're right. The market reiterating a Trump victory. He's pro Bitcoin, right? Pro M&A. He's not against all these things like the Biden is, and the Democrats with their anti M&A stuff. You know what I'm saying? So like, yeah, you're probably right. That's probably right.
That's what I think.
I just thought it was interesting. And then last night, I'm looking at the 24-hour trading sessions and on Robinhood, and the biggest winners were DJT, obviously. What is it doing this morning?
It's up 50%.
It's up 50%. Okay. So DJT obviously up a ton on that. And then also GEO, which is a company of mental health facilities, was up a bunch last night. It's actually only up 7% this morning. It was up like 13% or so last night. Tesla was also up 6% last night, up 4% this morning, which I thought was interesting. You're getting kind of like this, like, the best performers last night were the mental health facilities, the DJT, the Trump SPAC, and Tesla.
Yeah.
Oh, and any of the Bitcoin stuff. So like MicroStrategies, Mara, the double leverage Bitcoin ETFs, like all that stuff were all in the top 10. And Tesla. Why do you think that is? Why was Tesla grouped into that?
Did you see Elon's Twitter? It's the same theme.
I saw it after that, but you think that's what it is because Elon Musk endorsed Trump? So if Trump's a winner, he's going to help Elon's business?
What you saw with crypto after the assassination attempt had nothing to do with like a safety trade and everything to do with the pricing in of Trump, right? So now this is just a continuance of that rally.
Why is Trump the president good for Tesla?
Well, Musk just endorsed him, and you knew that. Musk has made a big switch over the years.
Fine, maybe.
You knew that was coming.
Fine, maybe. But what does that have to do with the stock, though?
They think Trump's going to take care of him. The stock market's stupid sometimes. I remember when Trump first came into office, he made a council of CEOs from all around corporate America. And if you were on that council, your stock was ripping. So this is the kind of shit that happens. This time.
Also, the Geo Bowden meme coin that was bouncing, when they flipped to the Harris and then back to the Biden, and you got a little bit of a bid there, completely rolled over, falling apart. Anyway, let's get to the markets. Let's roll.
Oh.
Hit it.
Yeah. All right. Wasn't ready for you.
All right, ladies and gentlemen, this morning we got the Dow futures up 230 points, 40,530 for the Dow Jones Industrial Average, the world's most important index, absolutely ripping this morning. S&P's up 22 handles, pushing 5,700 on the S&P 500. Remember coming into the year, the sell side analyst estimates, hilarious. How are these people still employed? The NASDAQ 100 up 40 basis points, over 20,600 as well. Bond futures, I didn't mention that last night in the open, with Bitcoin ripping, small caps ripping, the Trump SPAC, all these things ripping. Bonds got hit pretty hard as rates were going up. We're seeing that continue today. 30-year bond futures down almost a full percent, back under 119. Crude oil flat, another interesting one. In some of this geopolitical turmoil, perhaps you'd see a spike in oil. You have not seen that, just like you didn't see it in gold. Copper down 1%, 454. By the way, crude oil currently right above 82. Gold flat on the day, 24.20. Silver down 1%, just under $31. And of course, over in the old funny money, Bitcoin up over 3%, 2,000 points this morning, just under 63,000 for Bitcoin. Ethereum up 3%. That's 100 points on Ethereum this morning, 33.50. Solana up 3%. Back above 150 for Solana. Binance even making a move up 5%, 570 for Binance. Total crypto market cap, Spencer Israel inching higher, 2.25 trillion. And all of these Solana, Ethereum, Bitcoin, they were moving before this. They really got going after the Saturday night thing, but they were moving before. So this includes just from last night, these numbers, but they were already moving over the last couple of days.
So I want to go back to the theme that we kicked off the show with, because this kind of a day is important, right? It's also really interesting. It's important not because I think you want to make election trades, right? But if you have something in your account that's moving off of this election stuff, it's important to know, right? So you're seeing it, JC. Solar energy down big. Look at TAN down what, 3-4%. Geo, the private prisons are going. Geo looks great right now. This always happens. Rum, I don't know why rum, Spencer. This is one of those social networks, RUM. They're calling this a Trump stock. Not sure why.
Yeah, that's a Trump stock, Steve. Rumble is like the alternative. What would you call it? The alternative Twitter, alternative Facebook.
Is that the
no, YouTube. Rumble is alternative YouTube. It's the streaming.
Okay,
that's what it is.
So a lot of movement on this.
By the way, Geo is private prisons and mental health facilities. I know you guys keep telling me it's private, it's prisons. Yeah, sure, they have prisons, but it's mental health facilities.
Big trend. That's a mega trend.
Is it? Or is it just reiterating that because crazy psychopaths in Pittsburgh?
I would imagine Palantir is also catching a bid today because they are the company that is often pointed to as the one that should help us be able to avoid situations like this.
Up 1%. Just another day. I was looking at that too, because especially when you were talking about how because Elon likes Trump, it's good for Tesla. Well, you can make the same argument for Palantir, but we already knew that about Palantir. Didn't we already know that about Tesla too?
Tesla moves on news. It's just that kind of stock. You know?
Does it? Looks like we just crushed the short squeeze in Tesla. There was no news.
I know you did. There was that move started with news. Spencer can remind.
What was the news? JC was long.
I think it
had bad news was
sort
good
of started.
10%.
Yeah, it sort of started before the news, and then they come out with their deliveries, and then it really went.
Yeah, that's why I bought it, because of the deliveries.
I'm just saying, so you don't have to deny a catalyst for a good trade.
This is the first I'm hearing about any of these things, for the record. You may have said it at the time, and it was like,
I'm just, it didn't just ramp up like that for no reason.
Any thoughts on the bonds? Again, another one of those where, if you would have told me last week what was going to happen on Saturday night, I would have looked to maybe a flight to the bond market, a flight to the gold market. I would have said those are very high possibilities.
No, stop. Because I think this makes total sense, right? The market wants certainty. They want Trump's number to go to 80%. So that they could really start pricing things in ahead of time. That's what the market wants, right? So I think last night or the other night, that was a big moment. That was scary, that footage. But when he got up, he looked very strong. That's what people are looking for, right? When you think of the other side, I think that moment was huge for him. You're seeing the what do you call it? People come in and what do you call it? Elon is endorsing him and Bill Ackman and others now.
Did we mention the gun stocks yet?
No. What are they doing?
They're up in sympathy. SWBI, Smith & Wesson, RGR, right? RGR, is that it? Yeah. Sturm Ruger.
Oh yeah. Smith & Wesson is SW what?
SWBI.
Can't buy these stocks. Yeah. All right.
So there was a lot of bad takes immediately. When things like this happen, if you want to put something on Twitter, just
stay off the internet.
Just get off the internet. But there were a few bangers. I want to, before we close out this conversation about what happened. One. Let's end on a good note here. Slide 2, Spencer Israel. This was great. A lot of bad takes over the weekend across the board, both sides of the aisle. This was the last time Trump's ear was in danger. Come on. Too good. Right? No?
Fantastic.
Best tweet. Most of your tweets all sucked. So all of you retire from Twitter. You guys sucked with your takes. Bad takes across the board.
I saw a couple. I didn't see this one, but I saw a couple funny ones. Yeah.
No? All right. Can we move on now? The market has clearly already moved on. So let's move on.
Well, what's funny that you say that, JC, is maybe I'm just like a cynical person, but one of my first thoughts was, what if this had happened 24 hours later, right, on a Sunday night instead of a Saturday night?
Yeah, it's a good point.
Why?
Good point, Spencer. What would have been the knee jerk? Because we didn't see the knee jerk.
Right, there was no knee jerk.
No knee jerk.
Right.
So the knee jerk, I don't know, We'll never know, but my suspicion is the knee jerk may have been a little gold. Little gold? Little gold?
Probably.
Little yen, maybe? Little yen, little gold?
I don't know.
Little bonds? I'm thinking yes, but by the time the futures opened, all of that nonsense was already taken away. So that's a good call, Spencer. We'll never know. But I think it would have been a little gold, little bonds, and then it would have rolled over. Yeah, it's a good call.
I don't know. We'll never know. All right.
Never know. It's a bummer. All right, let's get into the markets. Why don't you throw up slide 4, please? Because this is a big one. 30-month highs, Strazza. 30 months. That's 2.5 years for you math majors out there. 30-month highs for both the S&P 600 and the Russell 2000. Let's remember that the S&P 600 requires a track record of earnings in order to be included, and the Russell 2000 does not. No discrimination at all. No matter how much money you lose, it's really only a market capitalization situation. But they look the same to show you how much the stock market cares about your fundamentals. In other words, the market doesn't give a damn about your fundamentals because one of them, you need earnings. The other one, they let anybody in, and they look exactly the same. So you could take your fundamentals and you could shove them up your.
So the Trump news is going to be in the spotlight and be all the talk today and probably for the rest of this week. This is the real big story for markets. So just again today, coming in pre-market, looking at the futures, just a continuance of last week's trend, last week's momentum thrust, right? Small caps up 1%, pre-market. You got Dow up maybe 0.5%, S&P and NASDAQ less than that. So small stocks kicking ass again out here to kick off the new week. If that trend continues, you get follow through this week. You got to look out. We got to start talking more and more about maybe we should own a lot more small stocks, right?
Well, that's what we decided early last week, if you recall. So, I mean, this is just more of the same. But Spencer, throw up the new the Russell 3000 here. So
hold on. We can't have conviction that the relative trend has moved and that the primary trend has shifted in favor of small caps over large for an extended time frame.
Can we have that conviction, you're saying?
You're not,
that move, the biggest move between Russell 1000 and 2000 last week, and I don't know how long. That was an interesting thrust.
Momentum thrust. Now you need confirmation from price, just like anything else.
So this one, although market cap weighted, so you're not getting a lot of Russell 2000 stocks in there, but this is the Russell 3000, which represents the Russell 1000 and 2000. So this is approximately 98% of all investable assets in the U.S. equities market, making new all-time highs. But that's not the big thing. The big thing here is pointed out by our friends over at RenMac, Jeff DeGraff, one of the greatest that ever did it. Shout out Jeff DeGraff. Pointed out how almost 50% of this index made new 1-month highs. Half the index. So that includes Russell 2000, by the way, small caps, and the Russell 1000 large caps across the board. So it's not so much that this index is making new all-time highs because you got a lot of Apple, Google, Microsoft. I mean, you got a lot of the big names that you see in the other indexes. So it's less about that and more about the components of that. Half this index, Strazza, 1,500 stocks almost, made new 1-month highs. Isn't that the big deal?
We knew it was feeling thrusty last week, so it's not a surprise. And yeah, it is a big deal. That's a really high reading. We have a bunch of breadth charts, but I'm saving them for Mike.
Good. I got tonight's conference call this evening. So for those of you guys who are wondering, well, great, JC, bull market, JC, great. Breadth expansion, JC, great. Sector rotation, JC, great. Risk on, Bitcoin. Yeah, great if you own the right names. And which names do we want to own? What are we rotating into? We'll be talking about it tonight. Spencer Israel, your suspicion was right. This evening is our mid-month conference call. We get going 6 p.m. Eastern time live for premium members of ASC Research. And if you are not able to make it because you have a dinner with your girlfriend, or maybe you are playing with your kids and you cannot make that 6 p.m. Eastern time, it will be recorded. It will be archived. You could download all the slides. All the trade ideas will be there. You can watch it as many times as you want. In fact, you could go back to 2015 and go watch those conference calls if you really want. They're all there, which is pretty cool, by the way. The fact that we used to only do it once a month, but I used to get so excited about it. I used to get so stoked, as I am now, we had to do it twice a month. Even my wife was like, didn't you just do one of these 2 weeks ago? I'm like, yeah. She's like, I thought it was once a month. I'm like, that changed like 5 years ago. Where have you been?
Yeah, it's been a while.
Where have you been, sweetie?
It's one
She's
of
like,
the
I don't think it's been that long. I'm like, well, I have the data, so we can argue about this if you want. See, so that's what it's like being my wife. Like, it always come back to the data.
I think it's one of the best things really you do. It's a great exercise, so why not do it twice a month?
Yeah, no, it's great. I love it. So tonight, 6 p.m. Spencer, drop the link in the chat. If you are a premium member, make sure to register for tonight so you have the link. If you are not, what are you thinking? Your life has gone horribly wrong. The way I see it, it's like, you can navigate these markets alone if you want, and there's nothing wrong with that. Or you can navigate these markets knowing that there's a monster team of traders and analysts working with you every day. That seems a hell of a lot better. That's how I do it. Granted, we're all on the same team, but it is so nice to be able to navigate these markets knowing that I got Strazza's eyes on the market, and Fonz and Ian and Sean, everybody, Grant, right? It's great. Shout out Fonz.
All
So
right.
that's tonight.
Tonight,
Big
6
night.
p.m.
Big night.
The QR code will be back up on the screen shortly. The link is also in the chat. Get it. Got it. Good. Let's bring on Kenny.
Bring them out. Bring them out.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Ooh, Kenny Glick in the house.
What's up, y'all?
What's happening, my man?
Momentum Thrust was my porn name in '82.
Oh, nice. Nice.
Yeah.
Weren't you a little too young to be doing porn in that year?
I'm actually 70 years old. I don't tell a lot of people.
You do look good, though. You do look good. You're a lot older than you look. I'll tell you that much.
It's
so
all
kudos to you,
it's
Kenny.
all the tequila I drink.
How many push-ups are you doing a day?
I'm doing about 250 now. What's up?
250 push-ups every day?
That's all I do. Where else? That's all I ever do. I just sit here and do push-ups, and I sit back at the table, sit back at the desk.
And then how many do you bang? Do you bang out like 50 and then take a break and bang out another 50 more a little while later?
I do 30 all around the house, basically. Yeah, all day.
Every room.
Every room.
So it's 30, huh?
Yeah.
Wow. Very impressive. So just like you have 8 rooms in your house?
Yep, just about. Look at you doing quick algebra on that one.
Well,
impressive.
When you got it, you got it, Kenny. If you don't use it, you lose it, I believe is what they say, right? Kenny, what do you got? Give me the name. What are we trading this morning?
Listen, I am still amazed at how resilient the market is. As the bear that's afraid of everything. And again, for a second after the Iran and Israel night, and I thought we were going to open up lock limit down. When this all happened, I was like, oh no. And then I realized, wait a minute, we're going to be up big on Monday. And here we are. So I'm watching the Trump stock for sure. It's already had a massive range, but Goldman Sachs is usually my go-to. I like when Goldman Sachs reports. There's a slight gap up on very little shares, and there's usually profit taking on any gap. So it's already held a 5-day VWAP. You want to see something pretty interesting so far. Take a look at my charts right here. Badoof.
Oh, yeah. Yep.
Just pulled back and held the 5-day. So, not a lot of volume. You can't put a lot into this chart, but today's VWAP is right here at the 8250. So if it breaks the 8250, I've seen this stock drop 4 points at the open. The way I trade the fade here is if you're not ready to risk at least 2.5 points, don't do this. Breaks the 8250. I'm a shorter looking at the 85 as my out if I'm wrong. But if it rolls, we got, possibly 2 to 5 to, 7.5 points to the downside. And generally Goldman Sachs does give up the gap. So Goldman's, big on the radar, but the Trump stock's got all the volume and it is shortable today. You can get a borrow on this stock for the first time in a very long time without having to pay for it. So easy short right there. If it breaks the 44 quarter, I'm looking to short the stock. But again, after seeing that picture with the blood on the face, his fist up in the air, that got me. I was like, yeah! I started putting on American music. I don't know, man. I just went nuts after seeing that shot. And I don't want to talk any more about it after that with conspiracy theories and all that. But that picture got me. It got me. So I was looking forward to buying this stock this morning. But now that it's already up, well, we just play it just like anything else.
All right.
Yeah, I saw one of those TikTok videos, like libs of TikTok or whatever it is, and it was like a satire, and it was like, you know, two liberals talking to each other. They're like, you hear Trump got shot?
Yeah.
And she's like, yeah, and he survived. Yeah. And he got up and he was bloody and he was screaming USA, USA. And it was like, that's pretty cool. Like, he's going to win. He's going to be the president. Like, it was two liberals, like having like a fake conversation. It was actually pretty hilarious. It's exactly what you're describing.
Absolutely. If the election was held today, it'd be a landslide. There's no doubt.
The prediction markets also spiked Saturday night too, I noticed.
I was going to mention
that's what I do. I'm at a carnival and I'm hearing this news. He survived. Everything's fine. We're good. Yeah. Although they kept shooting fireworks, and every time the fireworks went up, I was like,
there's so much that happened, and and here's the best part about it. I had family over, and we were celebrating for my daughter going to George and all that. I stayed off the internet until basically this morning. So
good for you, JC, Kenny.
Everybody needs to do that. I'm trying to convince my kids. My son does it. It just takes the time out from the internet. Just give it at least, try to do 12 hours. It started 12 hours. If you can go a day, it's fantastic. You actually feel better. It's a real thing. We need a timeout from the internet. So
yeah, agreed.
That's a great idea.
Bill Pearlman of you there, Kenny.
Actually, that's what he mentioned it also. Yeah, it is a fantastic idea. But especially when you know what you're about to be inundated with. Yeah, just step back. You know,
yeah, for sure. Twitter was terrible, except that Mike Tyson.
That is funny.
That's funny. That was funny.
That was a good one.
A few bangers every now and then, mostly terrible takes. So all of you guys should be ashamed of yourself.
Yeah,
give me one more, Kenny. What's on the move?
Sticking with my swings, the EOSC and the Jumama are looking really good. So I had to sell because it got to 13 on Friday. I'm selling I sold half. I still like this name to 18 and change. I'm not a big swing trader, but this one we're still in. And EOSC continues to power its way to that 250. I don't know much about it, but it got to where I thought we were going to go. And now above 250, I'm thinking we got ourselves a $4 stock here. So I'm sticking with this one.
Love it, Kenny. If you are going to join Kenny's room, Spencer, drop the link in the chat. Join Kenny.
Well, that's the link to his watch list, which you can get every day, regardless of whether or not you're in the room. But I do recommend getting to Kenny's room. Go to hitthebid.com. Hitthebid.com.
Join me live, baby. Yeah,
Kenny's room. That's where he's going right now.
Yep, we're talking. I go for at least till about 11:30, 11:45 nonstop, just throwing out the ideas. You see my screen, all the trades. All right, boys. I'll see you in there.
Adios, Kenny. You know what I like about Kenny a lot is that he's very mean reverting in nature, so it's a great portfolio diversifier. For example, the DJT, he's looking to short it, right? Not because he's an anti-Trump guy or not because, he thinks it's a fugazi. It has nothing to do with that. It's because it's up 50%. So if it breaks certain support levels, there's a lot of downside, for an hour, half an hour, right? That's all it is.
Yep.
If the Trump thing was down 30%, he'd be looking to buy it, right? Looking for a breakout. So it's very mean reverting in nature. So it's very complementary to a lot of the other things that we do around here. So I like that a lot.
No doubt. Also, no one or very few people are more aware of their own internal biases than Kenny's of his. And just being aware of that is a huge advantage.
For a perma bear, this dude is long a lot. You know what I'm saying?
Yeah. No kidding.
It's really
anyway.
Cool.
All right,
nice.
Before we bring on Mike Hurley, let's just do some new stuff real fast. We have that Goldman Sachs chart, which Kenny just mentioned. They're kind of the big report of the morning. Usually Mondays are a little bit light on the earnings front. Mondays and Fridays are somewhat light. Goldman is up. What are we up now? It's flat. It's up 0.5% this morning. They did beat on their earnings, and they are raising their quarterly dividend from $2.75 to $3 per share. Capital returns, returning capital, Goldman Sachs, and of course, the reports of last week, the JP Morgan, Wells, Citi, those are going to set the tone for Goldman and Morgan Stanley this week. But a lot of these moves get priced in to some extent. But Goldman is Goldman, and the chart speaks for itself, and it's strong. So, wanted to mention that. Do you have thoughts on that, JC?
I mean, it comes back to capital markets. It comes back to the fact that these stocks have already been working for quite some time. I'll point to Berkshire Hathaway, which is a larger component of the financials index than Goldman Sachs and JP Morgan combined. I would point to Piper Jaffray and Jefferies and Piper Sandler. Piper Sandler is the name of the company. And I used to be Piper. What did it used to be called? Piper.
Yeah, you're right. Piper Jaffray.
It's not Piper Jaffray anymore. It's Piper
That's
Sandler.
Piper Sandler.
Now. And then Jefferies also. They both outperforming Goldman Sachs, both this year and in Q2. So it's not just a Goldman Sachs thing. Goldman Sachs is part of a group that has been doing very well. So I think it's more of being in the right place, being part of the right group associated with those kinds of names than maybe what they're doing on their own is kind of how I see it.
Yeah. And one of the big highlights from, JP Morgan's report was that they had raised the fees on their investment banking, and investment banking is making a comeback. So if investment banking is making a comeback one place, probably making a comeback at investment banks, smaller ones, right? Piper Sandler, Jefferies. There's always one more, and I can never remember what it is. There's like 3 smaller boutique firms that are public.
Well, like Raymond James.
Maybe that's the one I'm thinking of. I don't know. I just know there's 3. Okay, Ray J is good. Do we have the calendar? Can we bring the calendar up, Fonz, real fast, just to set the stage for the week? This week and next week are the heavier earnings flow, right? So I mentioned Monday, Friday's being a little bit light, but Tuesday, Wednesday, Thursday, we got a lot going on. We got Netflix this week. We got home builders. We got transports. We're done with the banks now. Who else do we got? Domino's is on there. Abbott Labs is on there. A lot of big names this week and next week too. Intuitive Surgical, Interactive Brokers, a lot of stuff going on.
How excited are you that it's earnings season, Spencer?
Yeah, I mean, I get particularly excited for this one and for the earnings season in that takes place in the first quarter, because you get like the end of the year stuff. But this one is fun because it's sort of the last hurrah of summer. After this is gonna, August is super quiet. Everyone's out in the Hamptons doing their thing, and it can get pretty dull in terms of just storylines and news flow and what's going on.
Again, I'm having this discussion with my wife because we're taking our daughter to the Museum of Natural History to see the dinosaurs and the butterfly exhibit, and then we're gonna go to Central Park, go to the zoo, go have a nice little lunch. She's like, "Why don't we go in September?" I was like, "Hell no." I do not want to go in and out of New York City in September with our kids. No. We want to go in July or in August when there's nobody there. Yeah. God forbid you're in New York during General Assembly or something like that. Oh, the worst. Yeah.
Also,
so if you want to go to New York City, go now.
September is a big conference month.
If you want to party, like if you're young, like if you're in your 20s, you want to day drink all day and you want to party and all those things, great. Go in September. It's actually fantastic. But for when you're in my situation where you got strollers and kids, fewer people is much.
A lot of conferences in September too.
Yeah. Too much going on.
Right, Steve?
Avoid New York.
September's big conference month. I am so excited for earnings season. So glad it's here. It's just the best, isn't it?
No. I wish they never reported earnings. The blockchain fixes this, by the way.
Drinking out of my Goldman mug today, Go Goldman. You got to root for your home team during earnings season.
Oh, is Goldman Sachs your home team?
It's a home team. We got a lot coming from the suburbs around New York.
Okay. No. Bring in Mike Hurley. I want to say hi before I hop.
Just a hi.
Before you hop.
We got a conference call tonight. I got to work. I can't just be sitting around here. I'll be back tomorrow. Don't worry.
We're about to have a breath party, and you don't want to be a part of it.
I know. I'm a little bit upset about it. I'm not gonna lie.
Who are you?
You got to do what you got to do, man. You got to do what you got to do.
Wait, Mike is joining right now. Give Mike like 5 seconds. He's coming in. I promise. Yeah, Mike, click on that link now if you can. Oh, there he is. All right, he's here.
Bring him out. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mike Hurley in the house. What's up, my man?
Gentlemen, great to see you. How are you today?
I'm doing fantastic. I don't normally do this, but because it's you, I wanted to come in here and say hello. I gotta go because I got a big conference call to prepare for this evening, and you and Strazza can have your little powwow. I know how excited you guys get when you guys chat with one another about market breadth. Well, we'll be sure to be tuning in. I gotta hop, but I did want to say hi, Mike. Good to see you, buddy. Love you.
You as well. Good luck on the call, JC. Steve, how are you?
More breath talk for us, Mike, is how I look at it. You know,
it's going to get broader.
What's new? How are you?
I'm doing great. It's great to see you guys. It has been a while.
It's been too long, but this is a perfect time to have you on because everything that, you know, we're looking at on the analyst team, this was the best breath, I would say last week, that we've had since we came off of those Q4 lows last year.
I agree. And I was thinking the same thing on Thursday when we had that big day. I'm like, oh my goodness, I'm so glad I'm going to be talking to the boys on Monday. It's the perfect Monday to be on. I'm glad, you know, karma worked out right, or kismet, or whatever you want to say.
The market gave us some good material.
It really did. And so you guys liked it as well.
Yeah. Yeah. But you go first. I brought a bunch of charts. I know you brought a bunch of charts. So I'll give you the floor. Tell us what it means. What did you see last week? What do you think of it? And tell us where you want us in the deck.
Well, deal. Well, in general, I think this has been one of the weaker bull markets, as you and I have discussed in the past. And of course, JC's up to speed on this. We've all been on the same page. First year of the bull market, boy, is this thing going to keep going? Is it not going to keep going? Should we worry? Should we not worry? Well, the second year really broadened out. We were all kind of wondering if that correction is finally going to come. And just about the time you thought it wasn't going to come, because things can be resolved two ways, either those broaden out. And I'm glad we finally saw the rest of the market broaden.
Mike, your connection isn't great. We're gonna fight through it though. We're gonna fight through it. Let's power through. I want to hear this.
Spencer, he's frozen.
All right. I spoke too soon, it appears.
Take him off and try to figure it out.
Let's see. Oh man, his connection looks strong here.
Can you guys?
Mike, why don't you try this? Try just turning your camera off. Turn the video off.
Yeah.
It usually does the trick. Or he's gonna refresh and come back. So we'll wait.
All right. Listen. He was pointing out.
Wait, he's back. Mike, you back?
Mike, we can hear you. Can we?
Son of a gun.
Spencer, go figure it out. I'll rant about some of our breath charts.
All right.
So the conversation that hopefully we can figure out the tech side of things to have is all about the big breath expansion. And really, we got some, I would say, mid-cycle thrusts yesterday. So let's talk about what that looks like. The point Mike was making was that this whole bull market coming off of the 2020 lows, that's when internals bottomed out, the bear market lows summer, Q3 2022, the whole time it has been unusually thin, right? By any historical standard. What does that mean? Just the percentage of stocks that are participating to the upside in any material way, less than usual. Not what we would expect to see in a bull market. So they're still figuring things out. Let's hit the charts, Fonz. Let's go to our breath charts. What does this look like? Just start at the top, the 1 month highs. So if you look at a chart like this, it goes all the way back to 2018, 2019, which is important because we had historic thrusts across the board. And like the majority of the thrust indicators that we track back in May to June of 2020, coming off of the pandemic lows, some of the best signals I think we ever got from market internals. Then we got some sort of thrust. Again, when this cycle started, you could see it in the Q4 of 2022, right? That would be the highest reading since Q4 of 2020. So we thought, okay, this is the new thrust kicking off this new cycle. And it came early. But then if you look at Q4 of 2023, the thrust we got last year coming off of the October lows was far greater, right? You could see it in all of these charts. That would be the highest reading going back to the pandemic lows for all of these, and the S&P 500 was close. So whether you want to count the breadth thrust from 2022 or last year as the one that kicked off this new cycle, we got that reading. Then what happens is you tend to get extreme readings throughout the cycle, but they never hit that high watermark that you hit when things began. So I think we'll look back at the end of this cycle, and in most of these indicators, this is the short-term new highs, 21-day new highs, that October 2023 reading will be the peak reading in all of these. So we're not expecting, some monster week from the market like last week to bring us north of, that monster reading, almost 70% in the S&P 500, 1 month highs. We don't think we'll get back there. But what we did see last week is the highest reading since then in so many of these indicators. You see in all three of these here, right? Especially small caps, right? Really got the job done. Pretty high reading. Took out all the readings from earlier in this year. S&P 500 marginally beat the high readings from earlier in this year, but still the highest reading since Q4 of last year. Now let's talk about some of these other charts. Throw up 6, the All Country World Index. Another thing that's happening, and I think this is important too, is we're getting that breadth expansion in a really significant way outside of the US. I think this also goes with the whole cyclical or rotational theme into more value stuff or more just lagging stuff, more speculative stuff, more interest rate sensitive stuff. They have more of that around the world than we do here in the US. So highest reading and new short-term new highs for our universe of country indexes, developed, emerging, about 50 countries around the world. Highest reading since, yes, Q4 of last year, and really almost took out that reading. Really, one of the highest readings we've seen over the past few years. So that's a big one. Now let's talk about themes that we're seeing. Chart 7. The S&P 600 had a far more notable reading than the S&P 500. I think this also speaks to that big rotational theme from last week, where we talked about how the Russell 2000 small cap index had outpaced the large cap tech sector index. Its biggest day of outperformance of all time last Thursday. At the same time, the percentage of stocks that were hitting new short-term highs in the small cap indexes, this is the S&P 600, was a lot better than what we saw from the S&P 500, from the large cap world. So go to the next one. Right, so large cap's great. It is the highest reading, but look at how it barely took out the readings from earlier this year. Back to the 600 chart. We blew out any reading from earlier this year. So I think that also speaks to or supports this narrative of rotation. We need to see follow through in price today. And like I was saying to JC earlier on the show, the trend hasn't turned at all yet. The primary trend we can't say is in favor of small caps, right, in that ratio chart. But maybe we get there and we look back and we say, oh, that was the momentum thrust and breadth thrust that kicked that all off. That would make a lot of sense. Now, okay, we need to see it in price.
I think we have Mike real fast. I'm just going to bring him on real fast. Mike, do we have you?
You guys, I'm so sorry about that.
No,
we're good.
All the time.
I should have gone to a Starbucks.
I kind of tried to take it and just rant about this unusually thin bull market. So why don't you pick up right where you left off?
Well, I saw a little bit about what you did there, Steve, and I think you're exactly right. You can't say the small caps are leading, or at least not yet.
Yeah.
But the fact that they're participating is great news. And Spencer, do you have that one slide deck and the one slide that says stocks that has the S&P on the top and the Russell on the bottom? Is that handy with the red-green stripes?
Yeah. Is it 20?
There you go.
Yeah.
It's a little hard to see, and there's some words on there that take up space. But in general, it's a very similar chart to what you just showed, Steve. And you can see on that line of new highs that we were starting to see some divergences there.
Yeah.
But my point of view in this slide, and this is my travel deck where I go around the country and talk to advisors, as long as that Russell 2000 holds and doesn't break and doesn't see actual technical damage by slipping through the 1900 area, we're okay. And as you mentioned a few minutes ago, what happened on Thursday and Friday is the Russell made a new 52-week high. So to see the Russell actually breaking out and starting to participate with a little bit more vigor, that's what I think the great news in the market is last week, is those guys are really starting to catch a bid.
So you're the breadth guy, but you're talking to me about price. Explain how important the concept of confirmation, price confirmation, is with any of this breadth data. So you look at the breadth, right? But then you go back to the price chart. Talk about, how you do that.
Well, and I think it's the most important thing in the world. And it's funny because the longer you do this market game or be in this profession, the more and more you just start sticking to price. Now, I use breadth a lot, and I know you do as well, because it's a good hint and an indication of strength under the surface. And it really is like the pulse and blood pressure of the patient. But none of it matters if price isn't doing what it's supposed to be doing. You don't buy new highs and new lows, you buy the price of the SPY. Right. So it's the most critical factor of them all.
All right. So how important is it? Because last week, not only do we have this thrust from the S&P 600 index, the Russell 2000, small caps, I would call it, can I call it a mid-cycle thrust? Like it's not the thrust, right? We're not going to get back to the Q4 last year thrust, but for something like S&P 600, most new highs we've seen since that period, really for all the indexes.
Yeah, no, and I think it's good news. And it's funny. I would not say there is a typical pattern of a bull market where, the small caps typically lead in the beginning. They typically lead at the end. And so it's a sign of a late market. Yeah. Well, probably one of the best pieces of research I've ever seen is from our good friend, Steve Suppmeyer, on the small caps. And what's interesting is you get consistent small cap outperformance during secular bears. So
right. It's weird.
It's the weirdest thing in the world, but it's consistent. If you look at it back through the 65 to 80 market, the lost decade. So the fact that the small caps aren't really starting to outperform means we're probably not at the end of this secular upswing yet. Maybe we have a bear market and one more cycle. Yeah. But as long as they participate, it's okay. And again, that new 52-week high last week was really, really good news.
So at the same time they had the new 52-week high, we had things happen like its biggest day of outperformance over large cap tech since the beginning of a large cap tech index back in the late 90s.
Yep.
Biggest single day outperformance from the small cap Russell 2000. We had a breakout that really happened in a big way through a really clean level of resistance, breakaway gap, I would call it. Best day performance-wise for the Russell 2000 all year. Then we had the breadth stuff that we're talking about. Is this all added evidence that maybe we do need to be looking more at small caps? I would also add in the fact that, just like your chart before, it shows the S&P 500 almost gone vertical, right? Russell 2000, this is a fresh base breakout, like a brand new trend reversal, I would say. Like, do you take all this together and say, ooh, I really like small caps here, or do you really have to wait for the relative?
No, I think you really like them here. And certainly I don't think, the S&P 500 crashes or anything like that. But when it comes to a relative risk and relative reward point of view, man, I love the small caps. And this is sort of in the middle ground, Straz, between breadth and price action. Yeah. But look at, KRE, look at XHB, look at the home builder index. Some of the larger, or not larger, but the higher level sector ETFs as well. XLF, XLI. These things had some triangle consolidation patterns, and they're starting to pop through them. So on one hand, that's breadth. On the other hand, that's price action. But you're seeing price action under the surface in a broader number of groups, which is positive. I think there's your confirmation.
I just love it when we agree. Two of my favorite trades, like on the sheets right now, are regional banks and home builders. And it was when I look back.
And I didn't know that.
Oh, they're so good right now. I couldn't agree more with you. We've been pounding the table on these two areas for the past couple of weeks. When I looked at the sector level and even industry level at the breadth from last week, it was all the interest rate sensitive stuff that really made the biggest move. So like throw up the financials one, Alfonso, it's on 11. So this is just the XLF components, percentage new 21-day highs. The best readings were in stuff like financials, real estate, home builders, just absolutely ripped last week. So I think it's time to probably pay more attention to the stuff that's been held down from this high rate environment.
Yes. And if you look at the 10-year treasury yield, the TNX, it has been in a nice uptrend channel that a lot of other technicians have been talking about. And you can argue that broke last week. Now, again, you might want to wait for a second weekly bar close below it. Some technicians like to do that. Some bite on the first break, whatever.
Yep.
But you're starting to really be able to make the argument that we've seen the cycle high in yields. Now, I don't think we've seen the secular high, and I'm not so sure yields, get much below the mid threes or, maybe just a 4 or something.
Yep.
I think you're in a secular uptrend in the 10-year treasury yield, but I think 5 was the cycle high for a while, and we probably need a sideways action and before you see before you see 5 taken out anytime soon.
I think that's so important because we talk about, how great risk assets were last week. That's what drove it all. That year-to-date trend line going, Powell was in front of Congress for 2 days, and then we had the nice and cold CPI, which is exactly what the market wanted. And then rates confirmed it with that, break of the trend line. And I think the dollar too could draw a little year-to-date trend line on the Dixie. So we used to call these intermarket headwinds. Maybe they become more of tailwinds. I don't know, but this is what we're talking about.
Yeah, exactly. And the 10-year, you can argue, broke on some weak economic prints, and we've had an inverted yield curve for over 20 months. So I'm not so sure it's good news for the economy. And that's where I'm seeing the most confusing picture is the stock market is a leading economic indicator. And sure enough, the S&P looks great. The Russell I like more than the S&P. I think the S&P could correct. But, here is the best leading economic indicator of all, still pretty much rock solid. And you really do have reason to worry about the economy now, I think.
So explain that. You don't want to see rates come down too much here. Why?
Because short-term rates are controlled by the Federal Reserve. Long-term rates are controlled by the market and the market's expectations of inflation. Well, what makes inflation work? Strong economic activity, or what causes inflation, I should say, strong economic activity. So the fact that yields are starting to slip pretty meaningfully suggests that we may not have that strong economic activity out in front of us pushing those things higher.
What Mike is trying to say is if you read too much of the newspaper or watch too much financial news, they say this inflation, this I word, like it's such a bad thing. Like it's like this terrible thing. The main driver of inflation is typically economic growth, which,
yes,
doesn't sound like a bad thing to me. So it's a double-edged sword. You don't want rates sky high. You also don't want them plunging because that's the market telling you something bad is coming economically. You kind of just want them hanging out. This trend line break is okay. You don't want to see them plunge 200 basis points, back to like new lows. So
exactly. Much more eloquently said.
Why don't you talk to me about the rest of the charts that you brought? What do you want us to throw?
I brought the slide deck in case we wanted to chat about one. The probably only other one I'd like to throw on there is our shotgun chart, which I know you and I love to talk about because we're pretty nerdy.
Last one.
But that's the table on the left is every market cycle since 1932. It's very hard to see, but trust me, they're in there. And we might arm wrestle over one or two of the cycles. But in general, there's a bull market that lasts, for 3 years and goes 100%. And you see a bottom roughly every 4 years. That's part of that presidential election cycle. Yep. The reason I wanted to show this was for a couple of reasons. One, the S&P is tagged, or it's the current S&P, and the red and green squares are shown based on the low in October of 22. Yeah. So if we have an exact repeat of any of those market cycles, you'll see either a red or green square. The point is, in times of inflation, deflation, peace, war, the red team in the White House, the blue team in the White House, you have a pretty good average of market cycles around 100% and 3 years. Now, we're not quite 2 years into that. In fact, we're right sort of to the left side of the bottom left corner. Yep. But we should have a little bit more to go. And if you look at the bottom left corner of that square, you can see 3 red outlines. Those red outlined markets are the markets of the 70s. So yes, when we have an inflationary environment, you do get somewhat weaker bull markets, but they're still, in that one standard deviation circle, and we still probably have a little bit more upside. The only other thing I wanted to show, and this is me being, sort of snarky and irreverent to all of our strategists and fundamental.
Yeah, look at where they are.
you fellows out there. And that vertical brown line was the year-end targets of all the Wall Street analysts. And the blue arrows, the blue dashed lines, start on January 1st, is my point. And so if you look where the market was January 1st, well, man, there were more estimates for the market to go down than up this year. And if you just had a regular bull market, you were going to really blow away the analysts and strategists. If you had a weak bull market, you would still exceed the most bullish target for any of the analysts. And that to me just shows the market was poised to climb a wall of worry. And that's literally the wall of worry right there, that brown vertical bar.
That kind of stuff is so important. When we came into the year, the analysts were all offsides looking for a pretty crappy year. Coming off things that we saw in 2023 that from a technician standpoint, we were all counting on a really good year. Not only that, the bond market expectations were so offsided, but 6 cuts. How many cuts do we have we had? We're halfway through the year. No cuts.
Yeah, exactly. Not 6.
Why are they so bad?
Largely, I think because they follow the headlines, and the headlines are looking in the rearview mirror. The charts lead the news, and it really is true. And if you're focused on headlines or economic data that is constantly changed, revised, whatever, you're looking in the rearview mirror. You're not looking forward. Again, and we said this a minute ago, Steve, the stock market is a leading economic indicator. Yep. The economy is not a leading stock market indicator. In fact, it's the opposite by definition. So that's why I think, these folks get so, are wrong, so even, so often, if I can say that, and why watching the charts really is like reading the headlines, a couple months ahead.
So using economic data, which is already stale, old data, that's already lagging data, and then it lags more because it's reported, however, month late. It's a tough job. If that's that you're working with, right?
It's like going down the freeway backwards, driving in your rearview mirror. It's unsafe. It's just plain unsafe.
So talk to me. It's July 15th. We got basically the whole back half of the year in front of us. What are you looking at? I know you like small caps. You mentioned the financials. You mentioned the home builders. What other areas do you like?
That's kind of it. I think we're in a positive period seasonally. I think we're going to see some rotation in the market. I do think sort of the everything else is going to start catching a bid. But while the average bull market could go another 15 months or so, we're probably in about the 6th inning of the game now. And again, if we see inflation a resurgence in it, or some other things go on, I could see a shortened cycle here, not hugely short, but maybe the next rally as we get into the end of the year, the beginning of next, is when we start seeing the split and the divergences and we start rolling into a top. But I don't think we're rolling into a top yet, and I don't think you can point to a top on the charts. So you just have to play the trend and play where the strength is. The move out of the trading range in the KRE is good. The pullback in the builders is good. There are strong, healthy charts out there that have been consolidating for 2-3 months that should have a pop higher, a squirt higher, an ongoing rally, whatever you want to call it.
Yeah, love that. I mean, not only can we not point to a top, I think it's actually quite the opposite in terms of trend. If you look at things like biotech, you mentioned regional banks, Russell 2000.
Yep.
They just completed trend reversals. So those are nice.
They just consolidated for several months.
They're just breaking out. Like they're just getting started, it looks like. And I think the Russell 2000 is a far better representation of what most stocks are doing than something like the S&P 500 or NASDAQ. So if most stocks are getting started, no top yet. So when you go back and you look at your work, history suggests, based on past cycles, we could go another 15 months.
Yes, the average bull market would get us to October of next year. And that would put a target on the S&P, again, average bull market, just under 7,000. Now, I don't know whether the market's going to get there or not, but that's where that middle of that bullseye is on that yellow circle on the previous slide.
It's not going to turn out to be the average, right, Mike? But it's a great benchmark to have.
It is. And that yellow circle is a 1 standard deviation circle. So, 9 months early, 9 months long, a little bit higher, a little bit lower. But that bullseye is right around October of next year at 7,000. So I think we have a little bit more to go. And speaking of market breadth and things like that, I know you and I both like to look for those fall days, Steve, and you can't point to a fall day yet.
Yep.
And until you see one, I'm not going to get too bearish. Now, you've had bear markets without the fall day if you go back to 2011. But again, unless I see one, and when I see things breaking out, I'm going to try and give this market the benefit of the doubt. And I think you guys are exactly right in your research on those sectors and groups to be in.
Thanks, Mike. You're the best. Last week, you know how this stuff goes. Everybody became a breadth expert on the internet last week. And we were having a lot of conversations about it, whether it was on Spaces or on here or the other shows. And it was like, guys, there's no fall day. You know, we got our thrust. Like, there's really not much in between those two things. Like, everything's fine. There's no fall day. We had the thrust. Like, breadth data in the middle of the cycle is a lot less important than it is at inflection points, the beginning and the end. So before Spencer kicks you out, tell everybody, like, how do you identify that fall day? What is it you're looking for? Because that's really the next big data point from a breadth standpoint.
It is, and it doesn't always happen, but the market cycle is like the weather: spring, summer, winter, fall. And when you see the market go up and you see a big downdraft or a large number of new 52-week lows, and the best example is going back to that Omicron scare around Thanksgiving, around the top in 2022. You had the market very, very close to its new 52-week highs, and you had about 500 new 52-week lows. Well, where did those come from? Well, there were some groups that were shaggy and some groups that were underperforming, and that was the first hint that the market was rolling into a significant top.
And you're using net new highs?
Net new highs on a weekly basis. So you can get the data in Barron's. It's a little bit difficult. It's a little bit manual and a pain. But I'll tell you what, I've been doing it for embarrassingly a long number of years, probably 20 years. But it's worth it to keep that data, and I have to do it in a spreadsheet every Saturday. But it's worth it because when the market's starting to roll over, it's important.
Barron's Market Lab, an oldie but goodie.
It is, and I wish you could download it, but you just can't. So you got to do it.
I know.
And when you go on vacation, you got to call your friends and say, "Hey, I missed it. Can you give me Friday's print?"
Yep. Mike, am I on your list of people that you're gonna text and notify when we get this fall day?
100%. Okay. And I hope it's the same. You're my first guy to go to compare notes.
Oh, I was so excited when I heard you were on the show today after last week. I said, nobody better that we could talk to.
It was the perfect week for guys like you and I, and it was an unusual week, and you can argue it bearishly. Hey, how can the market not go up? When you had such strong breadth. It was an 80% update, but the S&P was down 1%. Oh my God.
Yep.
But when you look at what was really going on in those groups and sectors, I think you guys are exactly right with regard to banks, biotech, builders, anything with a B is kind of looking okay.
I'm into it.
All right.
Same thing.
Mike Hurley is the chief market strategist at Next Point and one of our favorites. Oh, before we forget, Steve.
Yes.
Didn't a little birdie tell you something about Mike?
Uh-oh.
Mike, people are trying to get in touch with you. Have you heard this?
No.
People are trying to get in touch with you. They want your work for the new CMT curriculum.
Yes. I finally have found the email that was at the bottom of my box. And so, yes, I've been honored to be asked to write the market breadth section for that curriculum. And it's a huge honor. And I am finally in touch with Lewis and Stanley and all the guys there who I love.
Congratulations, buddy, because that's a huge deal. And it's about time. We knew this day would come, but hell yeah, that's awesome. That's really cool.
Well, thank you. And thank you to all of you at the channel and all of your watchers and readers, because it's nice to be with like-minded folks who like to look at the market the same way.
Yep. All right, Ben. Well, we'll talk soon, Mike. Thank you.
Thanks a lot,
guys.
Mike.
See you soon.
So this is just such a treat. What we were just talking about at the end there is we have 3 big textbooks that we read to learn the CMT curriculum. They're like the Bibles of technical analysis, along with the old books. And Mike will be submitting his material and his work to be in the breadth section, market internal section of the curriculum, which, we copied Mike for our approach to breadth for the most part. He's the best who does it. So now to be in the CMT curriculum, and that's just so awesome, because all you got to do is study for the CMT to learn how to analyze breadth and market internals the way that Mike Hurley does. And no one really does it better. So
awesome. Great stuff. All right. It is 9:36. They're off. Chat and Kenny, not the only ones getting short. DJT off the open. That's the way it goes, though, sometimes, right? So we're down DJT, which was up, what, as much as 50%, now down 8% from the opening bell. But if JC were here, he'd say let him dance. Just interesting action off the open.
You got to fade that. You could. There's only one thing.
Of course. Of course.
Yeah. So Spencer, what do you know? Like, you know a lot about music, like music history?
I know a little bit. I wouldn't say it's my forte, but I know some things. I was at Woodstock over the weekend.
Oh.
I saw, that's where my buddy's parents' place is, and saw Jason Mraz at Bethel Woods, which is where Woodstock was. So
that's pretty cool. Do they like give tours of it now? Because that was
yeah, I mean, I've been there before. It's a concert venue now, but you can go and see there's monuments and stuff, and yeah, it's great.
So that was the like real Woodstock, or the one that they tried like in the 90s?
No. Well, that was at the same place, I think, but no, this is 1969. This is the real thing.
I saw a cool documentary about that one. I forget where it was, but boy, I really enjoyed it. About the second one that was like a huge failure.
Oh yeah, that was a disaster.
Yeah.
Yeah. Well, they both were disasters in a way, but
yeah, right. Okay. Anyway, so listen, the Four Tops. Have you heard of them? Slide 2, Fonz.
Of course.
Four Tops, right? Really good. Who doesn't
Yeah.
like the Four Tops, right? Throw up just so everybody can see what the Four Tops are. These are the Four Tops. No, fuck. God damn it.
Motown, baby.
I was building to something. Ah, fuck it. All right.
What?
You have the Four Tops. You have the four non-blondes. If they got together and formed a band, it would be called the Four Non-Tops, and this would be the album cover. Now you can show the tops. See, fine.
I don't know what's happening.
We gotta give him a break. Now throw up the tops. It's all we ruined the bit. It's fine.
Okay.
Throw up the tops, for crying out loud. The four non-tops. You like them?
I mean, this would be good for me if So yes, I like this.
We have scoops. We are now scoring. Drop VWAPs. Pick your spots. Get in responsibly. Let them dance as long as we're back above these pivot lows. Don't get short and don't get out, because we have seen these patterns so many times. Just Q1 and Q2 of this year. Failed top. None of them, Spencer, none of them have been tops. So it's probably a top for failed tops sometime soon. But these patterns, betting on failures of these topping patterns, has been the secret this whole year. This has been the best pattern. Last year was the reversal patterns, right? We were running those bearish to bullish reversal patterns coming right out of their bases all day. This year, it's failed tops because most of the reversals are already in. The reversals have already been printed in the best areas. Now, these are continuation patterns. You don't want to bet on something topping and reversing right after the trend just reversed in the opposite direction, because trends persist. So if the primary trend in Binance, Ethereum, Bitcoin, and Solana, the four largest cryptocurrencies, is higher still, you see it on the left-hand side of these charts, coming off, major run off the Q4 lows last year. Primary trend is higher, or in the direction of the primary trend, and think that when these ranges resolve, they probably resolve higher, the same direction that they came into these ranges from. I don't think these will be tops. I think you can be so long cryptos right now. You're seeing all the crypto equities rip in the pre-market today. Oh, we're already open. So,
yeah. Well, I mean, what a difference like 3 days makes, right? For crypto, right?
Maybe. Let's go. Coinbase up 8%. Woohoo.
Yeah.
You could sell the puts, you could buy the calls, you could buy the common, you could buy the tokens. A lot of ways we could do this. MicroStrategy, not a top. Coinbase, not a top. The miners holding their lows. A lot of hot moves in crypto markets today. MicroStrategy up 10%.
For sure. I mean, that's leading. You look at your up filter, your down filter. You see a lot of crypto names on there. As far as the down filter, Macy's, down 15% today. SolarEdge is down. They're doing layoffs and they're down. Usually that's, but then again, all solar is down today.
That's trading today, the solar stuff. I really think it is.
Solar is actually leading the way downward today. All the solar, Sunrun, SolarEdge, CSIQ, First Solar.
So Matt Millam's question: can you play these not tops with things like Coinbase, GBIT, IBIT? Yeah, they're not as clean, but yeah, I sold puts in Coinbase last week. Sell puts in a lot of these things. The cleaner, the better. And you really don't want to sell puts until you get momentum to the upside, right? You don't want to sell puts right in to some sort of breakdown level. You want to sell them as it moves off that breakdown level. So it depends, but you look at something like MicroStrategy, and last week it was pretty clean. It looked a lot like Bitcoin. So yeah, I think you could do similar things. I think you just want to look for a well-tested level. Like the home builders were really perfect examples from last week. All of that stuff, Spencer, that worked so well last week, the follow-through is clear as day from Thursday's action, right? If we close anything like the way we opened today, all of those trades from last week are following through today, right? Whether it's the speculative tech, the bios, like look at something like, the IPO index reversed a little here. Real estate, home builders. We get another day of follow through today. I mean, that's the market talking to you. That's the market telling us maybe this is some sort of regime change, right? In terms of market leadership. Maybe it's better to call it a simple broadening of the rally, right? That we've all been waiting for and looking for since last year. What it really means for investors, especially people who like to invest in individual names, more options, right? More places that we could go fishing in. More bullish chart patterns, more opportunities to make money. It's not a bad thing. It's a lovely thing, really. Probably golf less, but that's okay.
Golf less.
No, it's fun. Markets are so fun. I think this weekend was a bit sad and tragic. Thought that kind of stuff was over. When's the last time something like that happened, Spencer? It's been a long time.
1981.
It would be nice to think that that was kind of behind us for America. So that's kind of disappointing. But the market's just Teflon. Not even blinking.
Yeah.
No.
All right, let's bring on Ian Collie. Maybe there's something we missed on the global front in terms of the reaction to this weekend.
Yeah.
Let's see what he has to say. He also gave us a few charts as well.
Bring him on. I will be back in 2 minutes.
What up,
Morning.
Ian? How we doing?
Good. How are you doing?
So what did you see? We kind of talked about at the top of the show in terms of the market's reaction to the events of Saturday. But was there anything that we missed, or anything that you saw on the global front, the forex front, and the futures front? Because you're more in tune to all that stuff in terms of the reaction.
I saw some dollar strength last night, but it's fading right now.
Okay.
So no, not really.
Not really.
Not really. Yeah, like
Right,
Steve was just saying, the market's Teflon. So
Wall of worry, is that what they call it, Ian?
yeah.
All right. I saw you in Slack. Was that you dropping a few charts in there? Yeah, that was you. Let's bring a few of these up. Why don't we start with this gold chart. Well, where's that at? There we go. Same story here?
Yeah, see, the reason I wanted to share this one today is that a year ago we started out with an obnoxious gold target around 5,000. At least we thought it was obnoxious at the time. If we measure the move in the 2000s, a similar percentage gain for gold puts it up around 8,000. And this here, the chart that we're looking at right now, just looks at an extension level, the 11,000 percent, 1,100% extension level during the 2000s. And a similar move would be up around 10,000 for gold futures. So just I just want to keep an open mind to where gold could go, and I thought it was really interesting. If anyone watching or listening hasn't watched and listened to JC's interview with Rick Rule, I highly recommend it. It's amazing. So much to glean from their conversation. But what I thought was interesting is he he described the 2000s bull run as modest. Just kind of threw that in during the conversation. So, he seems to think that gold could go much higher, and we could see a prolonged bull run for gold and just precious metals and mining stocks in general over the coming 10 years or so.
If you missed that, I'm going to drop the link to the video in the chat right now.
And the market's rewarding us for owning gold and silver mining stocks. Gold's not breaking down. Tight consolidation, pressing towards the upper bounds of a multi-month range, nearing new all-time highs. Silver's digging in; it won't roll over. Platinum digging in at a critical level, won't roll over, and so is palladium. So even those areas, the more industrial, like platinum and palladium metals, they're not breaking down. And stocks like Newfound Gold that last month registered a new all-time low are ripping higher. So, even the worst areas of the gold and silver space are doing really well right now.
What about away from metals?
Ian, the theme today has been, this Trump trade stuff and broadening participation to other areas of the stock market. Are there election trade commodities that might do better under one candidate or another? And are you seeing price moves like that yet?
I don't put too much thought into that, into election trades in terms of commodities. I look more at seasonals and cycles. I see natural gas probably outperforming crude oil. I think we see crude oil around 70 before it breaks higher. I think in that environment, we want to look to some natural gas stocks.
I wonder if there are any, regardless of candidate, we look at the election cycle for stocks, say stocks are usually pretty good in a year like this. I wonder what commodities would show. We did something.
Well, everyone thought that Trump was going to be bullish. His election back in 2016 was going to be bullish for dirty energy, like coal names. And after the election, solar soared. Yeah. And then Biden was elected.
Yeah.
And then coal ripped. So again, I don't want to put too much into it. The market's doing really well. And there's a lot of opportunity in the energy space right now. And I think that opportunity is in coal and uranium. And even when we look at oil and gas, and we talked about rotation, looking for, oil services and, E&P names to begin to catch higher and participate. And we've seen some of that so far this year.
So we've been, pounding the table about these failed top patterns, right? And how they're just great trading opportunities. When I look at something like coal or uranium, these things are coming off of failed toppy stuff. Whether you look at something like CEIX, AMR, looks like it's just trying to get out of some sort of failed toppiness here. And then if you look at something like NXE, the uranium names have similar structures, holding big lows and showing some momentum last week, right?
Yes, absolutely. Absolutely.
Show Ian my rates and dollar chart. I need to see where your head is at on this. How excited should we be? How excited should bulls be about these little seemingly insignificant trend line breaks? Because the market was ripping last week as these things were coming off. So is it not important? Market thought it was important, I think, last week.
I think so, but I drew these trend lines a little tighter earlier in the spring.
Hence the reason we all don't love trend lines.
Right. So, I see the dollar catching lower. I see, rates rolling over here. Again, crude oil heading back to 70. Dollar yen finally really starting to come off, maybe going back to 147. But again, I've been saying that for months, and it's been an absolute mess. So I expect the market to continue to be messy, and especially the intermarket relationships or landscape. But this is important, though. nonetheless. And
It can't be bearish, right? It can't be bearish, something like this.
no, it can't be bearish. And again, like just trade what's in front of you. I mean, stocks are doing really well right now. Last week was incredibly bullish. And this week is really starting off with a bang.
So should we be more excited about material stocks right now than the energy names? Because when I look at the range in something like XME, this thing, one big candle breaks this thing out. This could happen this week. XLE, still some work to do there. No?
Yeah, and I think that has a lot to do with leaning on coal and uranium when we're in the energy space right now. I think that those two they're materials.
Coal and uranium,
in many
actually,
ways,
we consider them energy, but they are classed with the material stocks by the data providers, the powers that be.
I did not know that.
Right.
Yeah, coal and uranium.
Really?
Materials.
Yeah.
Yep.
Oh, I learned something today.
Tiny.
All right.
They're not going to move the needle in either space. But yeah, they group them in materials. Always have.
Yeah.
And solar energy stocks, fun fact, often in technology. Semiconductors. Crazy.
Yeah, makes sense.
That's silly. Yeah, but all right, whatever. Well, how does the size of like the solar market compare to like uranium and coal? Is it equitable? Is it?
Let's see. I doubt it, but they're so small it might be.
Yeah.
Find my solar. Okay, so solar, I have the largest company is 25 billion. It's bigger because they got First Solar.
Sure, they have First Solar.
Enphase is 15 billion. Like
Yeah,
just those two alone. Everything after that, they have this NXT Next Tracker, which I don't know. That's a new one for me. That's 7 billion. But after that, you got Sunrun 3.5 billion, and then it's all 2 billion or less.
Yeah.
It's something like coal.
AMR.
Let's see, the biggest coal name, it's got to be AMR now, 4 billion. Right. So they
All right.
Solar's
So First Solar's the outlier.
They have tech stock, they have tech valuations.
Yeah. All right.
Yeah. So they just have bigger market caps. Whether it's right or wrong, we don't make those rules.
Yeah.
But these coal stocks will trade at 2 times earnings.
Ian, what about TLT? Mark's asking.
Yeah, I think we can be long TLT as long as it's above 92. I mean, we put that trade on like last month or the month before. And it had a lot to do with looking at dollar and rates and seeing that breakdown or failed trend line violation in the spring. Yeah. So maybe this one's another failed trend line violation. I don't know, but stocks are doing well. I think we could see bonds rip if those two lines continue to fall. The dollar and the 10-year yield, 30-year yield, then TLT is going to do very well.
I've been asking Ian, periodically since last year, should I buy bonds? Is it time to buy bonds? I think this is really the first time I've heard you be like, yeah, it's time to buy bonds.
Yeah.
Okay. Then next level thinking, if I'm buying bonds, it's a bull market. Don't I want to buy high yield bonds instead of treasuries? Which bonds?
No, I'd buy treasuries.
No to high yield.
No to high yield.
You're telling me risk off things, or is this got something to do with something else?
It's not necessarily risk off things. I mean, just like what high yield bonds are you going to be buying? I think we get a better move in long duration treasuries.
Because I'm the chief YOLO officer. When I hear you say buy bonds, I'm like, okay, emerging market high yield bonds, right?
Yeah, like if you want to, I consider those risk assets. So if you want to buy risk assets, why aren't we buying small cap tech? Why aren't we buying the altcoins, right?
Well, those charts, like something like EMHY or HYG, look more like the Russell 2000 than the TLT. They got some nice bases shaping up.
Yes,
they look like speculative stocks.
Yes.
Okay.
Yes. Good. Absolutely.
And gold's been doing okay since last week.
Yeah.
Those trades are back on.
Yep, they are.
You see, you love this wheat and precious chart. Do we have do we have the WPM? Is this the best vehicle for most people? Is that a fair thing for me to say or no?
Man,
it's simple.
I spend most of my time running through the small junior miners and looking for great levels to define risk.
So you want to choose. If you pick the right juniors, you'll get 4 or 5x over something like Wheaton at the end of the cycle.
Yes, absolutely, or more. Again, I'm thinking like 10.
If you pick the wrong one, what if you pick the wrong one though?
we have levels to define risk. I mean, you could always pick the wrong one, no matter what we're trading, and that's where risk management comes into play, which is so important.
If you pick one, it'll be based on relative strength and, like you said, like clean, clear levels. And if that relative strength ends, then you simply get out of it and get into one that's showing relative strength.
Exactly.
Yeah, you keep
exactly.
Yeah, I think that's fair, man.
Yeah, but switching back to energy, I continue to look at these oil refiners, and I think if you want to step in and buy the dip here, it's not a bad idea. Like waiting for that rotation into the other industry groups, again, like services and the explorers and producers.
Yeah,
I mean, we can wait, but just looking at the charts, I do like stepping in and buying MPC. I like,
yeah.
Valero, stepping in and buying Valero, stepping in and buying Phillips 66.
ESX.
But yeah, Valeris looks great. There's a few other names that also look great that aren't refiners, but
we were talking to Sean about selling puts or a risk reversal in Valero, I think, last week. You got a clear level here. Those highs from 22 and 3.
Yeah. Retest of the breakout.
Recess time.
Run the bumper.
Who's got what?
I was just gonna say, Jason Mraz. Surprisingly good show. I didn't really know what to expect. Not a very big Jason Mraz fan.
Jason Mraz? Fantastic. Lovely music. Beautiful music.
3 of his songs. But I went to see him on Friday night, and he put on just a great show. And he's got pipes. This guy can really belt it out. And his band was tremendous. Just a really fun, positive, good show. If you get the chance to see him, it's a fun time. Even if you don't know the songs, I don't know most of the songs. Really fun time. Very upbeat, very like positive music.
It's happy music.
Yeah.
People need that. He sings that "I'm Yours" song to do, right?
Yeah. And that's the one that everyone knows, right? But even the songs you don't know, they're all, they're all very positive and make you want to pop your head and feel good about yourself. So
it's Jack Johnson-ish stuff.
Yes.
Right? Those two are always confused for each other because they're both like, Ian knows, like California hippie surfer guys, right?
Yeah. Singer-songwriters.
Yeah, right.
Yeah.
Well, Jack Johnson was didn't he grow up with like Kelly Slater? They were like good friends growing up. Or
I don't know.
Yeah, Jack Johnson's actually a really good surfer. He grew up in Hawaii on the North Shore.
I know my Jack
Johnson. Him out in the water a lot. He's very talented.
Hawaii?
Yeah.
From
He grew up on the North Shore. Yeah.
Your friend, you guys are friends? Listen, I want to talk about failed tops if you don't have any recess, Ian.
Blue Angels. We had the Blue Angels last week.
Ooh.
Yeah.
I love
the Blue Angels.
Yeah.
So
we had family visiting, so we were all out at the beach for most of the week, and watching the practice shows. And Friday was a blast. Kids loved it, but by the end of the week, like they were on the beach just digging trenches, not even paying attention as like the Blues just like buzzed the shore. Yeah.
I golf with a guy who used to fly them.
Really?
Big retired military community down here.
Very cool.
I cry every time I see him because the first time I saw the Blue Angels was right after 9/11. They started flying them over the Giants games because people were afraid to organize in big groups in stadiums right after. So they'd fly the Blue Angels over right after the national anthem. It's good stuff. Cool. Good stuff. So that's awesome. I'm sure the kids loved it too. Throw up the software chart. We had a question about how we trade these failed tops. So let's just walk through one that's already pretty much triggered and hit target. If you're trying to trade these patterns, rather than pick an entry for a longer term investment position, right? If you're trying to trade them, this one already complete. So we talked about this IGV. This is large cap software. It comes off of the lower bounds where we have the bottom rectangle drawn. You get a little scoop, a little failure where the oops is drawn. You could enter on the reclaim of the pivot lows right there. That's the most aggressive way to enter this pattern. Maybe too aggressive for some. That'll fail a lot and be a low probability trade. Now, you can wait for confirmation, drop a VWAP from a key pivot high. In this case, I dropped it from the second pivot high in this range because I want an earlier entry. I want to get in. Also, you got the breakaway gap right after we took out that VWAP. That's pretty clear. For me, I would say, okay, build the rest of the position there, right? You could scale in. You could do half at the yellow, half at the green. But once you're back to the old highs at the top of that range, the trade is over. And if you did it through options, you want this trade to work and work quickly, and then it'll pay you better, if that makes sense, right? You're doing it with options because time matters. So this one worked perfect. You should have been out at the red when we retested the range highs. Now you're seeing a little pullback, this and that. I'm out of most of my software positions now. Can't wait to get into new positions. That'll probably happen in an environment where this range is now resolving higher, which could take weeks. It could take months. It could happen this, this week. How'd I do, guys? You okay?
Great.
All right.
Yeah, those are great tactics.
That's our
All
shot.
right. Once again, 6 p.m. tonight, conference call. There's the QR code. It's only for members of AAC Premium. If you want to get the call or get the recording, that's the way to get it. QR code.
There's a lot to talk about. There's a lot to talk about on this one.
Yeah, for sure.
Big development last week. Last week was big, and let's see if we get follow through this week.
Yeah.
Things are changing. Things are changing out here.
All right, Steve, we'll see you in a little hour and a half, I guess, on the Flow Show with Sean. Also want to plug once again, if you did not listen or watch the latest episode of Off the Charts from Friday with Michael Nels, check it out. Spotify, Apple Podcast, search for Off the Charts, and guys did great.
What a mensch Michael is. Really good. It was an excellent conversation.
You record that thing, so true man.
Yeah, good for him, right?
Smash the like. Thanks to Mike Hurley. Go make some money. We'll see you.
Happy Monday, everybody.
See you guys.
I can't take no loss. I don't even know what it